Evening, everybody. Welcome to Crypto After Dark. There's a lot on for today. Everything is just seems to be getting more chaotic. You got new lows in a lot of stocks. You're seeing oil spike. We haven't seen a major volatility spike yet, but oil is just what everybody wants to talk about. So let's talk about that. Let's talk about more specifically what that means for crypto. And then in addition to that, we've got all this stuff with the Clarity Act. Circle was down 20% in a single day. You had Coinbase as well, down half of that. It was down 10% in a single day. There's a lot of movement in the Clarity Act. And I think the market is overreacting on some things and it's underreacting on others. I want to walk through that. We've also got Dan Huscher. We had a conversation earlier this week. Here's the COO of Luca, which is one of the largest crypto data providers in the entire world. They work with Bloomberg, S&P Global. They are redefining tax treatment for crypto around the world with these new CAF rules. Because believe it or not, you might not know this, but beginning next year, every one of your crypto transactions on an exchange like Coinbase or Binance is now automatically going to get reported to tax authorities under the new CAF rules or the crypto asset reporting framework. And so you need to know this stuff, and you need to know how these tax authorities, how these crypto businesses are using this data. So that's why I'm so pumped to have Dan on the show. So that'll be a conversation a little bit later in the conversation. So how's everybody doing? I see SM Traz in the chat. When to buy more CC and hype? You know that I like my Canton. And Luca as well. So going back to the conversation and the interview that I had with Dan earlier this week at Luca, Luca is one of the 42 super validators on the Canton network. So I asked Dan what his opinion was on Canton, as he's working on the front lines with these data companies, with these companies that are reporting tax, with institutions. And so you're going to hear what Dan's perspective of Canton is. So that's going to be interesting. I just want to dive straight into it. I want to talk about Bitcoin. Let's share this tab instead. Reported, I buy crypto and avoid that silliness. Exactly. And so when I tell people about the crypto, about the CAF rules, and I say every transaction that you do on your Coinbase is now going to get reported to a tax authority. And so you need to be, if you're sloppy with your crypto taxes, this is a wake-up call, because crypto is moving into the real world now. And what made crypto so exciting, being the wild west of finance, is no longer, because it's being integrated. It's being integrated into the financial system, right? Because so Maple Finance is one of the largest DeFi protocols in the entire market. And the CEO, he said something in November of last year, and he said that DeFi is dying. But the reason DeFi is dying is not because it failed, but because it succeeded. Because the lines and the boundary between traditional finance and decentralized finance are blurring, and they're becoming one. The New York Stock Exchange and the NASDAQ are now developing their own tokenization platforms. All of these big banks are now moving all of their funds and their deposits into tokenized deposits. Now we have this whole thing going with the Clarity Act that's going to bring even more regulatory clarity, because now we're going to understand what's a security, what's a commodity. And a lot of these big institutions and big companies have just been waiting for this. Have been waiting for a little bit of uncertainty. And now there's obviously a little bit of controversy with the whole stablecoin rewards situation going on. We'll talk about that a little bit later. But I think Coinbase just needs to get back to the table. They need to sign the Clarity Act now, even though stable coins and affiliated providers like Coinbase aren't going to be able to provide yields in their current capacity like they are right now, and banks are probably getting the good side of the deal. They can work around that. And I think the most important thing right now is, as the name of the bill suggests, is clarity. Coinbase should get back to the table. They should sign that. It's going to be good for the industry. And I think that's just what the industry needs. I'm buying CC weekly until I get to the position size I want. Interested in your take on coinage holding up. Clarity Act, some say the bill may die. Many are angry at Armstrong and agree. Don't need to worry about each tick. Yeah, I mean, the whole Clarity Act thing. Let's talk about that now, because why not? And should I say, just first and foremost, before we just dive into everything, this is strictly for information and education purposes alone, not to be construed as financial advice. And so for the full terms, go to allstarcharts.com/terms. It's very important just to set that framework. So here's the whole Clarity Act thing. Let me get the tweet. Let's share this tab instead. So on the 24th of March, there was this tweet, and it said, new details are emerging about the latest legislative text outlining a compromise on stablecoin yield and rewards. And so, where is it? So according to an internal stakeholder email shared with me, the proposal would prohibit platforms from offering yield directly or indirectly holding a stablecoin or in a manner that resembles a bank deposit. And so this is the thing. The Genius Act was signed and it was put into law, and that was about governing stablecoins. And it said the stablecoin issuers like Circle and Tether can't pay out interest on these stablecoins, but so-called affiliates could. And that was a little bit of a loophole because Coinbase, they can offer stablecoins as an affiliate and they can give you interest and they can give you yield on that stablecoin. And so now what's happening with the Clarity Act is that the Clarity Act is not just governing stable coins like the Genius Act, but it's governing the entire crypto ecosystem. It's all about defining what part of the crypto ecosystem is going to be legislated and overseen by the SEC versus the CFT. I'm having a bit of a moment there. But what part of the crypto market is a security versus what part is a commodity? And so now that we're in this process of debating about what should be included in the Clarity Act, the big banks have come in and they want to tighten up that affiliate line in this new legislation. And so there was this leak earlier this week where the new act would prohibit platforms from offering yield directly or indirectly from holding a stablecoin or in a matter that resembles a bank deposit. And now, obviously, that's the reason why Circle got absolutely killed when that leak came out. It was down 20% in a single day. Coinbase was down 10% in a single day. And so this is a very big topic. You need to know what's happening in this whole legislative debate that's going on right now. And it's really complicated, right? It's not just as simple as saying enable these yields for the stablecoins, because there are going to be so many other external potential consequences of allowing this to happen. And so what the banks are coming out and saying is, we do a lot more than Coinbase, right? We are in a fractionalized banking reserve system where if we get $1 in deposits, we lend out a whole bunch of money in terms of mortgages, business loans, and that loan and that credit that's created drives the credit expansion of the overall economy. And so if there's capital flight out of the banking system and into these stable coins, there could be a whole sweep of negative consequences for the overall American economy. And that is a legitimate argument. And people are saying, well, the banks are just fighting for their own self-interest and they're just trying to maintain the system that they have where if I, as a depositor, go in and I put money into a savings account and I get a fraction of the interest that I get compared to the money that banks put into money markets, banks are just fighting for their own self-interest. But I think we're kidding ourselves if Brian Armstrong isn't out here trying to defend his shareholders and try to do the exact same thing as banks. Brian Armstrong and all these crypto companies, they're not some righteous, moral people in this debate. Instead, we have banks and crypto companies both fighting over their own self-interest and over their own shareholders. And that's a good thing. But I think there's this narrative that's been spread out there that the banks are evil and they're trying to continue on this monopoly. And they're doing it out of self-interest. Well, these crypto companies that are going to Washington and going to DC and lobbying around the Clarity Act are doing the exact same thing. They're doing the exact same thing. And so this thing is extraordinarily complicated. And there's a lot of narratives out there and a lot of stories and a lot of conspiracy theories. But I think you just need a really strong bullshit filter. There was an interview on Fox News. Let me share this instead.
So does that mean that the bank,
and I think this gives us a little bit of insight into what's happening here as well.
etc., don't want to be regulated like banks do? So does that mean that the banks, in a sense, are starting to win the argument about the rewards?
Well, Cheryl, the banks are at the table as well, but let's remember, we're talking about an apple and an orange. We're not talking about Apple versus Apple. A stable coin is a $1 to a $1 backing, whereas your savings account is a fractional system. So we're talking about two very different systems altogether. But yes, we want to make sure that the advertising or the marketing of a stable coin account is very different than an FDIC insured bank account. That's
this debate is extraordinarily complicated. We don't know what the implications of this is going to be. If I go put money into Coinbase and I hold stable coins there, it's not going to be FDIC insured. It's not going to be used to create credit in the overall economy. And so it's not an apples to apples comparison. And so this whole conspiracy theory about the Clarity Act and how banks are just fighting for their own self-interest, again, you just need to step away from that. And I think when it comes to something like Coinbase, I think Coinbase, the overall setup here is still really bullish. Even though we've got a little bit of a dip here following this whole Clarity Act situation, I think longer term, I think this is a really encouraging setup that we've got here. I think that we're going to put in a higher low. And I think Coinbase is ultimately just going to continue moving on ahead. And look, these crypto companies have got the smartest lawyers in the world, right? And so let's say the Clarity Act is signed right now today. In 3 months' time, these crypto lawyers are going to find some sort of loophole like they did with the Genius Act to give and to dish out these stablecoin rewards. And so I think what this industry needs most is just a little bit of clarity, a little bit of regulatory clarity, and then just figure out the yield component later. Sounds like Brian Armstrong is the only person holding up the legislation. What's more important, regulatory clarity or stablecoin yield? It's a fantastic point. I have cash in a Phantom wallet to trade futures on Drift. I don't know anybody who trades futures on Drift now that we have a Hyperliquid around. I respect it though. Should I use a centralized exchange? I don't want too much paperwork with regulators. Would you prefer I assume you're talking about Hyperliquid there. I mean, that's not a question I can answer. I can't answer that. Can't this coin offer yield like Hood? Would be more bank-like, but stable coins can be collateral. It doesn't seem too complicated. And yeah, and that's the point that I'm talking about, right? These lawyers are going to figure out how they can offer and get this yield out. And so even if we come to an agreement right now that's a little bit more favorable to the banks, there's going to be some loophole. I see that DeFi as well is not included in the legislation, so perhaps Coinbase could loop that yield through some sort of DeFi protocol. So they should just get that Clarity Act signed. But then look, when it comes to the overall market, things are looking a little bit more choppy. Bitcoin is failing to hold here. It's just messier for longer, I think, is what comes to mind here. And it's not just Bitcoin, it's Ethereum, it's Solana as well. And so, messier for longer. Now, I just want to double check, just to make sure that my quality is all good. I'm staying at this Airbnb. And my internet has been a little bit laggy. Okay. Sounds like my internet is alright. Louis, add some subtitles, please, or other audio immediately, please. I can do that. I'll get the guys on it. So what's on everybody's mind right now? The Clarity Act is a big thing. We're having oil spiking. We're having the S&P 500 completing a distribution top. That's what's on my mind. Technology as well. The XLK is breaking down as we speak. Well, the market's closed now, but It's making new lows. That is a major distribution pattern right there. And if technology continues to go lower, Bitcoin, Ethereum, Solana, the crypto space is going to go lower with it. But look, there's going to be an opportunity in that, right? There's going to be an opportunity in that. And let me tell you why. Because like I've been saying, most of crypto is absolute garbage, right? But there is a very select few that aren't. I talk about them every week. Canton's a good example. People are talking about Hyperliquid in the chat. That's another example. I talked about another one with my members in the call earlier this morning. I think that one has the potential to 3x by year end. I'm not going to disclose it here out of respect to my members. But there's quality cryptocurrencies out there. But if the market sells off and we have some sort of liquidity event and volatility spikes, the market treats all of these cryptocurrencies the same when that happens. And so they're going to throw out all the gems with all the other crap. And so there's going to be an opportunity there to go into the dumpster, to go pick up those gems, relatively cheap, because everybody treats these crypto assets the same, but they're not the same. And you need to do the work to find out which ones are genuinely differentiated between the ones that are just crap, because there's a lot of crap out there. What's good? What's good, mate? How's it going? SMH, the chips are holding up. For now, I mean, we've got a nice tight coil here. But look, if technology is breaking down, you're having some of the biggest technology companies in the world like Microsoft. Like, this is what Microsoft looks like right now. It can't catch a bid to save its life. Speculative growth as well looks to be completing a major top. And so if these things are breaking lower, semis are going to catch down with that, and we could see some sort of volatility event. But keep an eye out on semis. If semis break this line here, that's a concern. And then if that happens, Bitcoin is probably breaking a little bit lower. Now, for me personally, I take a little bit of a longer term stance. And so I've been talking about these price cycle highs for months and months and months. Bitcoin is above its price cycle highs. That's my level in the sand. And so we could just be in for a situation where we could be trading messier for longer, and that will be totally all good. So long as we hold these price cycle highs. These price cycle highs are really important. Still think layer 0 is promising. Yeah, I'm watching layer 0 as well. I don't own it yet. I only have CC and Hype. Yeah, they're doing some interesting things. I'm going to talk with the founder actually of layer 0 in a few weeks. So I'll report back. I will report back on that. They made an announcement with Canton today, so that's also caught my interest. Speaking about this whole VIX spike, or this volatility event, I want to share what Sean McLaughlin, our chief options strategist, had to say about this in his show. I believe it was earlier today. Because that's certainly what I'm thinking. And I thought it was a really insightful take.
In that channel, still going higher. We were talking during our analyst meeting today about VIX, and a few of us are of the mind that the VIX probably has one more spike left in it before things really turn around. We could see another spike into the 30s, maybe even getting up close to 40. I don't know when. It could happen tomorrow. It could happen next week. It could happen next month. I don't know when, but I feel like we got at least one more flush in the VIX before we start seeing this little structure here completely turn around. My argument
I am on mute. Goodness gracious. Absolute rookie mistake from my behalf. Yeah, so just going back, I just think the VIX, we haven't seen a major VIX spike yet, right? We haven't seen that VIX spike like Sean said. And so I want to see that happen because the selling that we've been seeing is very orderly, right? The selling that we've been seeing is very orderly. We haven't seen any major panic apart from the crude oil market, but we haven't seen that major panic. And so I'd want to see that. I would want to see a little bit of a flush here because buying a chart that looks like this is absolutely rookie. There are so many charts that are just breaking down right now. And what it means for Bitcoin is that it means that it's just not good in the short term. Starting to see yields beginning to spike higher as well. I'm not much of a yield guy. I go to Jason Pers for my yield insights. But when I have a look at yields spiking like they are and rallying like they are, that to me is the market paying a little bit more attention to this inflation story and potentially beginning to price in central banks beginning to increase interest rates. And so that is obviously going to result in credit contraction. It's not very good for speculative assets, long duration assets, stuff like speculative growth, crypto. So US yields doing that. Australian yields as well have just been climbing higher. It's literally broken out. Look at the Australian 2-year government bond yield. Look at this thing. The Australian Central Bank raised rates this month. And so it's not out of the question that this activity in the bond market, like we're seeing in Aussie, can't flow across the rest of the world right now. The tough part for crypto is that when they aren't working, there aren't any fundamentals that you can still rationalize buying. CRM, Adobe, Microsoft are getting crushed, but they are still businesses. I will it's a very interesting observation. I agree generally, but I don't agree for at least the ones that I own. That's going to sound biased, but I've done the work. I've done the work at understanding which ones are genuinely worth owning. Let's talk about Canton, right? I know that you guys are sick about me talking about this whole Canton thing, but it's a really good demonstration of where this line of thinking can potentially break down, because Canton, they publish their daily fees and revenue on this terminal every single day. So Canton has got this burn and mint system. And so let's say that the market cap of Canton got sliced in half and prices collapsed 50% in a single day. But revenues stayed the same. So revenue stayed at $2 to $3 million per day. And let's say they even increased. What's going to happen is because they've got a burn and mint system, prices will be trading below their fair value, and the supply of the Canton cryptocurrency is going to massively shrink. Now, what do we know about that? When supply shrinks, the price of the asset should, in theory, go up. We've seen that with oil, right? The supply of oil is beginning to shrink. I'm paying the most amount that I've paid at the pump to fill up my car in a long time because supply is shrinking. And so it's the same sort of thinking here, where price of the price of the Canton cryptocurrency is very closely related to its revenue. So if the market just bled lower and we saw some sort of liquidity or volatility event and Canton collapsed 50% with the rest of the asset class, but its daily fees stayed at $2 or $3 million, the cryptocurrency would become massively deflationary. Supply would be being withdrawn from the crypto from the crypto supply really quickly. And so that can be something that you can value it on, and that is some real intrinsic value that you can model it on. Same thing with Hyperliquid. Hyperliquid's got a buyback system. So they generate hundreds of millions of dollars of revenue every single year, and they take 90% of that and they buy back their cryptocurrency. And so even if the crypto market is relatively weak, at least one thing we can model it on is knowing that Hyperliquid has a genuine platform and they buy back their cryptocurrency. They have some way to capture value and make their investors wealthy. And so I agree, most cryptos don't really have any fundamentals, but there are a select few that do have fundamentals, and they're worth paying attention to, because when shit hits the fan and the market is just selling all these things off, you want to be paying attention to the select few that have got fundamentals that are now trading at a discount, and that when things ultimately inevitably improve, you're going to get rewarded for owning these assets. That's what I want to be focusing on. The EU is dead with this war going on. I mean, you talk about the EU, but even Australia, right? Where is it? So this is, I mean, Australia is close to my heart, right? Because I'm a New Zealander. Australia is just over. It's right next to us. So everything that happens in Australia, I pay close attention to. And I mean, these guys, this is a country filled with natural resources, and yet they're having an oil crisis when there's literally oil just underneath their feet. Because the government has obviously just squandered what natural resources they have and trying to go after these green targets, which is all very, very important, right? Environmental stuff is all very important, but not at the cost and the expense of your own security as a country. And so what we're seeing in Australia with the yields spiking, central bank finally hiking rates again this month, that's just catastrophic for Australia. And so you want to be paying attention to what's happening in Australia, because if yields continue to do what they're doing around the world, you're going to start to see central banks beginning to respond to this potential spike in inflation. I mean, just look at what's happening in Australia right now. I saw this clip. This is what's happening in Australia. People are just going to the petrol station. They're filling up all these petrol cans because the country is literally about to run out of fuel. Look at this.
You gotta be kidding me, mate. Hey, you gonna leave anything left for me? Hey, don't take all that fuel, mate. What about me? God damn it, man. He's leaving nothing. He's taking it all. Greed. You greedy man. You greedy man.
That's what's happening in Australia right now. So, pay attention to that. I also saw as well, I saw this. So the Philippines, with oil supplies basically depleted, people are walking to work now. Like, look at this. Literally a highway and people are just walking. What on earth? Yeah, so something to be mindful of. Need to visit New Zealand someday and retrace Frodo's path to Mount Doom. You know, it's funny you say that. I lived like an hour away from where they filmed Lord of the Rings. I would go there. That'll be like, I would go there, you know, a few times, and that was my special spot to go hiking. And so you're just camping, and you're literally in the place where they filmed Lord of the Rings. It's so good. So good. Check out the Tau BTC ratio. It has been on fire this week, says Adam. That's what Adam is talking about, excuse me. This is Tau. This is Tau relative to Bitcoin. This is it. God, that's an ugly chart. Let's remove those drawings. This is Tau on an absolute basis. This one is showing a lot of relative strength. You know, I went through the ecosystem, and Tau was one of these. Like, there's all these AI cryptocurrencies, and I just thought that they were always more narrative than substantial. I'm curious. I'm gonna fetch out my notes. What do I actually have written for Tau there? Any recommendations on where to go for tourism in New Zealand? Man, I could talk about this for an hour. If you're going in the summer, there's a lot of great beaches in the North Island. Abel Tasman and Nelson at the top of the South Island has some great beaches if you're going in the summer. If you're going in the winter, or even if you're going year round, it doesn't really matter. You need to go to Fiordland. You need to go to Milford Sound. You need to go to Doubtful Sound. You need to go to Queenstown. Mate, shoot me an email and I'll give you the whole itinerary of what you should do. Shoot me an email and I'll reach out to you. What I have for Tau, What do I have here? Yeah, so the technology I had listed as relatively above average. I mean, because this is one of the AI trades, right? This is one of the AI cryptocurrencies. But I think the problem with this is they've got a whole bunch of unlocks. They've got a whole bunch of VCs and investors that have invested in their early rounds, and they're now unlocking. And so this one is, in other words, it's a little bit dilutive. And so even if they can capture value really well, they've got that overhang, that supply overhang. And so this one's been quite messy for a while. I'm curious. I'm curious about this recent relative strength. I haven't, they may have put out some sort of update. It wouldn't surprise me. I need to dive into this one a little bit more. What do you guys think about the bit tensor here? One does not simply walk to Mordor. I bought many oil stocks today to fill my tanker. How great have these oil stocks been? Been unreal. Any recommendations? They should have. I know, you know, it's all these New Zealanders. If you go to New Zealand and you ask New Zealanders, I feel like half of them will say that they were some sort of extra in the Lord of the Rings movie. It's almost like a rite of passage for us to be a starred extra of Lord of the Rings. What's up with the unlock and hype in April? That's a great question. Here's what Warrior is talking about. Wonder if I can actually get a chart of the emissions. Hyperliquid. Keep feeding me the questions. Keep feeding me the questions and I'll answer them. Is this the chart that I want to look at? Give me 1 second as I pull this up. Yeah, this is good enough. So what we're looking at here is we're looking at, can I make this full screen? Yeah, I can. This is the unlock and the vesting schedule for Hyperliquid. So what even is this? Back in the day, if you used Hyperliquid early on, between 2023 when it was first introducing itself, and you were using the platform, they were giving the community that was using this platform airdrops. And so these airdrops were basically to incentivize people to come and use Hyperliquid because it was a new platform. It was trying to fix the cold start problem. And now with those airdrops that Hyperliquid basically gave out to the community just to incentivize them to use their platform, there's a vesting period. So they're not just going to give it to you and you can sell it the moment you have it. There's a vesting period, so you need to hold it for a certain amount of time before you can sell it. And so now we're hitting some of those vesting and unlock schedules where we're starting to see some of that Hyperliquid beginning to hit the market and beginning to get unlocked. Now, why am I not too concerned about this? Because for every other cryptocurrency, I would be really concerned about this. Because what it basically means is you've got a whole bunch of people that, whether they were investors or early users, they now are made liquid and they can sell their cryptocurrency, and there can be a whole bunch of supply hitting the market and the price of the cryptocurrency could collapse. That's what happens for 90% of these cryptocurrencies. You have a VC firm, they invest and then they unlock and then they dump it on retail, and then the price of the cryptocurrency just goes to zero. But there's the VCs and the investors, they don't give a shit because they already made their money because they just dumped on people, right? Hyperliquid isn't really like that, and we've already seen this. They had an unlock just a few weeks ago, and price just absorbed it because we have this buyback, right? Even though we're seeing new coins coming to the market and being unlocked, Hyperliquid is still a platform generating hundreds of millions of dollars of revenue every single year, and they're using 90% of that to buy back the cryptocurrency. And so not only is it absorbing any potential sell pressure, but it's exceeding it. And then in addition, the people that are unlocking probably don't even want to be selling because it's the single hottest name when it comes to perpetual futures and trading and the crypto space. So you're not going to be selling your Hyperliquid. You would sell it if it was some shitty cryptocurrency that didn't do anything. But that's why I'm not bothered about those unlocks in Hyperliquid. Is it New Zealand summer actually winter? Well, we're in the southern hemisphere, right? So it is currently, well, we're just leaving summer now. But when it's winter in the United States, it's summer in New Zealand. Thank you, Lloyd. You're the guy. I'll shoot you an email for sure. All good, mate. Looking forward to sending you my recommendations. I've been buying Ethereum still, and I'm going to buy the Stark with 10% dividend. Who's interested in that? I'm curious, because I mean, for those who aren't aware, Stark is the preferred class of shares for strategy. So you have MSTR, which is just common stock, and then you have Stark and all the others, which are preferred shares. What does everybody think about the preferred shares in MicroStrategy? I'm interested. So you're buying Stark and you think that it's a Ponzi. You're buying Stark thinking that it's a Ponzi. You look at that and say, you know what, this thing's a Ponzi, it's not gonna last, it's gonna collapse, I'm gonna buy that. I respect that. If I adjust for dividends, this is the Stark that Jay is talking about. So this one is supposed to keep the peg to $100. So it's supposed to keep $100, but the big problem with MicroStrategy is that they've literally basically just announced that their capital structure is failing. There is literally zero reason to hold MSTR. I'm sharing the wrong tab again. Here's MicroStrategy. Make sure my mic is still working. Make sure I didn't unplug it. Okay, it's still working. God, I'm in an Airbnb. And right now, I'm just like not used to it. I'm just not in my office. And so it's just all a bit chaotic at the moment. If you buy MicroStrategy and you're buying it with the goal of it being an investment, I don't know what you're thinking, because this thing, MSTR is the common stock of strategy, right? And what the company is doing is they are basically putting a whole lot of, what should I say? A whole lot of capital above the MSTR common stock. And so there's going to be so many more obligations that this company needs to do. And so every single time they want to start to raise finance, they are beginning to dilute MSTR. This thing is sitting at the bottom of the capital structure, and it's becoming more junkier and junkier and junkier with every sort of financial capital raise that these guys are doing. This thing is going to get diluted into oblivion. It's getting compressed. I'm writing a big report on this at the moment. My thoughts are still a little bit jumbled because this, even just researching this, even me, I'm a little bit confused. You really need to dive into the details, and I'm still trying to dive and weed through all the different types of shares they have and the different convertible prices, and even I am just like really confused, which isn't a good sign. The more complex things are, there's probably a chance that they're trying to hide something. And I think MSTR, I think this thing is just a piling load of turds. I would never touch this thing as an investment. Maybe as a trade, but this thing is never going to come back. It's never going to outperform Bitcoin ever again. With access to other forms of tokenization, why hold MSTR? You can buy crypto directly over most exchanges. Yeah, and that's exactly the point. There is no reason to own MicroStrategy. And even, just a lot of these corporate treasuries, someone said, what do you think about the PER? I think PER is one of the better corporate treasuries because it holds hyperliquid, so at least it holds a real asset, or an asset that I have a bit more conviction in behind. But even then, you can just go buy hyperliquid on Coinbase. You don't need to buy this particular stock. So Sailor said MSTR won't make you money. Did he really say that? Did the CEO of the company say that MSTR, that his own common shares aren't going to make you money? That is outrageous. Did he really say that? I need the source for that, because that's a crazy quote if that's true. Any new thoughts of updates on Mara holding shares? Saw the news of them dumping $1 billion in Bitcoin to buy back debt. Mara is interesting because they just announced that they are capitulating on their corporate treasury strategy. So they saw all of these companies like Iren and Cypher and TeraWolf fly by because they dumped their Bitcoin mining strategy and they pivoted to artificial intelligence. And they watched that from the sidelines. And they only now just realized, shit, we have adopted the worst strategy. So now Mara, after holding out for the longest compared to any other Bitcoin miner, has finally capitulated, and now they are pivoting to artificial intelligence. And so I think there could be a catch-up trade that is brewing here. You look at something like Mara versus the rest of the Bitcoin miners. And so right around this period, this is when all these Bitcoin miners, right around here, this is when they started pivoting to artificial intelligence. And that's where that major decoupling came in. And so is there a bit of a catch-up trade there? I think so. I think Mara begins to work higher here. I think it's putting in a little bit of a bottom here. It's going to be messy, but I think the worst is behind Mara. All right, I want to bring on Dan Huscher. We had a pre-recorded interview. So Dan Huscher is the COO of Luca. So Luca is one of the single largest crypto data providers in the entire world. These guys service S&P Global for their crypto indices. They provide data to Bloomberg, and they're also providing data to some of the largest financial institutions in the world, onboarding them onto crypto technology. And then in addition to that, Luca also operates as a super validator for the Canton network. And so this is a really interesting conversation. And it's a conversation where we come from two different fields. I come at it from the perspective of a trader and an investor trying to scout for opportunities to try to make money. Dan comes at it from a completely different angle. He talks about the data, he talks about tax reporting, and while that might be a little bit left field to what we talk about here on Crypto After Dark, it's all really important, because what you need to understand is that beginning next year, every single transaction that you do on Coinbase or Binance or Gemini or any crypto exchange is now automatically going to get reported to tax authorities under the new CAF rules. DeFi and TradFi are merging into one, and so you need to understand what that impact is going to be, and more importantly, how you can be positioned for that. So I'll bring on Dan. I'll bring on the interview that the conversation that we had earlier in the week, and I'll be back after that. Hey Dan, really appreciate you for joining us today.
Yeah, thanks for having me, Lewis.
Look, I just want to get started and just say, for viewers that may not know what Luca does, I was doing a little bit of research before, as I should do when having a conversation with you, and I found out that you guys provide a lot of pricing data to companies like Bloomberg, to S&P crypto indices, but most crypto investors haven't really heard of what Luca does. And so can you explain to what Luca does in a way that connects with the average person that just trades and holds Bitcoin?
Yeah, sure. So this is what I actually find most interesting about Luca. And if you're going to sum up the company in kind of just a couple sentences, I would do it like the following. Luca really sits at the intersection of institutional finance and digital assets, right? And so we provide the data infrastructure that institutions need to treat crypto essentially in the same way that they treat any other asset class, right? You need proper valuations and pricing, tax accounting, you need auditable defense records, inputs into regulatory requirements, risk management. And so like all of this basically kind of boils down in essence, we are the connective tissue between blockchain and traditional business needs. And so where this is significant in kind of looking kind of where we are today in the current state, you have major asset managers running tokenized funds. You have global banks building digital asset, custody products, and you have regulators in every major jurisdiction either, continuing to build out their crypto or modifying their crypto regulations. So, institutions need data that they can actually rely on, right? That holds up under audit and satisfies fair value requirements. And now increasingly, it's going to even help with regulatory requirements. And like we have CARF coming down the line as well. So like that's precisely where Luca operates and shines.
Well, talking about CARF, it went live this year, if I understand that correctly. And so now crypto exchanges now collect your transaction data and then they report that to tax authorities. So, I mean, what do I need to understand about CARF? As someone who just trades these things, I'm not an accountant, I'm not a tax guy. What do I need to understand about CARF?
Right. So CARF is the crypto asset reporting framework. And so what this really is, it's the OECD's answer to how tax authorities around the world share information about crypto holdings and transactions across borders, right? And so it represents a significant escalation in how seriously regulators are treating digital assets as a reportable asset class, right? And so why you should care, right, is your trades, your P&L is going to be reported to tax authorities, right? And so, making sure that you pay the correct tax obligations is, obviously imperative, right? And so at its core, CARF requires crypto asset service providers, like you said, exchanges and brokers to collect, verify, and report user information to their home tax authority. And that tax authority will then share it with relevant foreign tax authorities, right? So if you're trading across border. And it's actually quite broad, right? And so if you kind of read through it, it's crypto to crypto trades, crypto to fiat trades are included, and also certain transfers can also be applicable for CARF, right? And so basically, if you're touching CARF or your counterparties are in any kind of meaningful way, they're going to be subject to CARF. We are helping a little bit in CARF at Luca, just kind of to build on your question before and kind of around what Luca does. And I did mention around kind of the regulatory requirements and assisting with that, right? And so we kind of really help across two veins. Is one, it's the data organization and ensuring that all of your transactions are processed and are categorized correctly, right? And so that's kind of reconciliations, understanding tax lots, what your gains and losses are. And then in addition to that, where our reference data comes in is essentially, so not every asset is reportable under CARF, right? And so rather than trying to go one by one or do this kind of ad hoc or inconsistent, we actually have data elements within our products that will tell you if a specific crypto asset is in or out for CARF reporting, right? And so when you have kind of this level of detail, it starts to ensure that your reporting to the tax authorities is indeed correct and complete.
So these exchanges now, these crypto exchanges, they collect your transaction data and then they report that to tax authorities to make sure you're paying the right amount of tax. And he said not all crypto assets are included in that, so only a select few of cryptos are included in the CARF rules.
Yeah, so it really depends on the type of token that you're trading. So it looks at kind of stable coins, derivatives, NFTs. These all can be treated differently, whether they should be reported or not reported under CARF. So if my memory serves me correctly, I think there's 9 or 10 different kind of, I won't call them like definitions, but more of like guidance for CARF around whether something should be in or out in the CARF reporting, right? And so that will help determine the VASPs that are responsible to report the information to the tax authorities, that they're including what the tax authorities actually want to see.
I feel like that this whole transition, whether you talked about tokenization before, you're talking about CARF now, I feel like the lines between DeFi, decentralized finance, and TradFi, traditional finance, are beginning to blur a little bit, and the two are kind of becoming intertwined, and you're seeing that with the New York Stock Exchange, right? I talk about the New York Stock Exchange, how they're developing their own tokenization platform, and every financial institution is now developing tokenized deposits. Do you think this is a good thing for the space, or does it kind of kill what made crypto exciting in the first place?
I got to be careful with this question, right? And so it honestly probably depends on kind of where you sit and how long you've been in crypto and some of your background. So I personally think it's a good thing, right? And so you're absolutely right. It's real. It's accelerating faster than I think most people thought, even 2 years ago. And it's actually, quite frankly, behind some of the core strategies of where we're going to take Luca next. And if I can take just a step back, it's actually the reason why I joined Luca, right? And so I come from a traditional finance background, credit more specifically. So I spent I've been in data analytics and creating data products for financial market infrastructure for 20 years. The last 5 of those here at Luca. And I started to see the world move in a certain way, and like the benefits that blockchain technology offers to financial market infrastructure. And so I sat there for a while and I started thinking, like, why doesn't this work? Like, why does the world not move in this way? And I couldn't find a reason why it wouldn't. And this is going back 5 years. So like arguably maybe it's taken a while to get this amount of momentum behind us. But that's the reason why I joined Luca, because I wanted to be a part of kind of building the next generation, financial market infrastructure. Right. And so, what we're seeing today, it's really coming from both ways, in my opinion. Right. And so you see, the BlackRock's Buildle Fund, you got Franklin Templeton's Benji, you got Apollo and KKR. They're offering credit products on chain. Then at the same time, you're seeing kind of more crypto native DeFi start to meet institutional requirements. So things like permission liquidity pools, you're starting to see like, KYC and AML like on chain. And so you almost see it kind of from both ways, as like even, the traditional DeFi, moving into the institutional space as well. So it's kind of interesting to see this play out.
Can you walk us through what the next few years of this institutional adoption is going to look like for crypto? Because, like you said, there's some really exciting things happening on chain now with these institutions that are coming in, that are finally starting to incorporate this technology more into what they're doing and with their businesses. But I feel like this is the story that's been told for years and years and years in crypto is that the institutions are coming, they're going to come. Can you explain and just put into perspective just how serious this transition is that we're undergoing, and where the crypto space is going to move in the next few years with all of these institutions now finally beginning to plug in?
Yeah, it's a great question. And so kind of where we see this going through the next several years, at least still definitely in the immediate term, and then probably somewhere into the intermediate term, is, reality is, as these institutions start to tokenize, right, larger, more mature, regulated financial institutions will move a little bit more slower than what I would call like your crypto native or kind of your fintech type of companies. And so where we see kind of over in the immediate future is kind of this duality between, you have this tokenization and you have this tokenization layer, right? But at the same time, you have legacy systems, right, where the on-chain and the off-chain data still need to talk to each other, right? And so, we see this being a thing for, like I said, in the short term and in the immediate term, right? And so where you start to see this kind of, unfold over time, it's, some of the complexities of financial services and operations, they don't go away. What this really does is it concentrates it in the data layer, right? And so an example of this is, look at a, institution portfolio manager of the future. They might have a tokenized T-bill. They might have a stake in some kind of lending protocol, or they've lent out some of their crypto. They may have some staking positions on in a proof of stake network. And that could be sitting along, a commodity or even a traditional equity, all in the same fund. And so all of these need to be priced consistently. They need to be reconciled against each other. They need to be reported under the same accounting standards. And if you're trying to do this with two systems, right, your crypto or your digital asset system, and then your traditional finance system, it's going to be pretty difficult, right? And so when you look at like a company like Luca, right, this is really kind of where we're taking the company, right, is to be that one-stop shop We're not a crypto company that's doing some traditional finance. We're not a traditional finance company that's done a crypto bolt-on, for instance, right? This is a purpose-built platform that treats on-chain and off-chain with the same methodologies and rigor. Because at the end of the day, that's what institutions are going to need.
I was having a conversation with Suzanne, I believe, the CFO of Luca, just a few weeks ago, actually, before we were having this conversation, and she was talking to me about how Luca takes, because we have all these different crypto exchanges, right? You've got Coinbase and Binance and Bybit and all these crypto exchanges, and they've all got slightly different prices. And so if you're a big company that needs to report your tax, how do you report the profit if all of these different exchanges have got different prices? And so there needs to be a standard price for all of these crypto assets. And I just, again, like I'm a dummy when it comes to the whole tax thing. I just assumed you just go to Coinbase, you'll just quote what I've got there at Coinbase, and then you're good. Do you want to walk through, because I found that really interesting, do you want to walk through what that whole situation is?
Sure. So I always use the saying is the decentralization offers and blockchain offers a lot of benefits in finance, as I mentioned a couple of times, I think already, just the last couple of minutes. One thing that it doesn't is actual standardization, right? And so what a lot of people in kind of the traditional finance or institutional finance space probably take for granted, right, doesn't necessarily exist in crypto. And so if you want to know what the price of an equity instrument is, you go to the exchange that it trades on and you use the 4 p.m. price, and that's generally accepted as the price for that day. Like in crypto, as you mentioned, there's Kraken, Coinbase, Binance, there's the CeFi, there's DeFi, there's literally hundreds, if not thousands, of different exchanges that you can trade on, all with different ticker conventions. Even the tickers don't match, right? And so we won't go down this rabbit hole, but there's a whole data normalization layer that has to go on for any of this to really work. But essentially what we do is we select a principal market. So when it comes to GAAP and IFRS accounting principles, you can't actually use averages on your balance sheet, right? You actually have to perform a principal market analysis and use a single price from the principal market. And so that's why things like some of the other, I would call them retail, sites that use VWAPs or averages aren't fit for purpose for this. But there's a little bit of an additional nuance there, is you actually have to pay attention to the quality of the exchange as well. So as we know, there's different exchanges with different oversights and quality and monitoring for manipulation of their order book and the price formation that occurs on their exchange. So we take all of that into account, right? And it's transparent and programmatic, which means there's no human, and it's applied consistently, every day, all day. And so we come up with a principal market, and we use the trade from the principal market. And so what that does is it will allow you, if you hold crypto and you're subject to audits, right, from auditors, right, you will be aligned to GAAP and IFRS accounting principles, and you'll pass your audit, essentially. And so that's the reason why we had that product, is our customers were getting dinged by their auditor to say, hey, you're not performing the principal market analysis. And so we've now had this product for over 6 years.
That's fascinating. And again, there's all these little things that I never thought would really be an issue as someone who's not deep in the data space like you guys are, working with these companies, but they're really important. And one thing as well that I find is a little bit outrageous is even in 2026, we don't even have this agreed upon framework for what these crypto sectors are. So if I go to you and I say, Dan, look, I own an energy company or a materials or an industrials, we know what they are because we've got a very clear framework that everybody's agreed upon with the different sectors of the economy and the stock market. But if I say to someone, I own some interoperability token, they're going to be like, what the hell is that? And so when is that coming? When are we going to have a SPDR or an S&P sector classification for crypto?
Yeah. And so a lot of it exists today. And listen, I traditional finance even has several different taxonomies, right? And so there's the GICS. That's probably the most widely used within traditional finance, but there's others. Bloomberg has their taxonomy, and the ICV sector classification is another one. So even in traditional finance, you'll have competing sector classifications, and you have some of them, in crypto today, right? There's several providers that that have sector classifications, and Luca is one of them as well, right? And so we provide a taxonomy that looks very similar to traditional finance and some of the GICS style sector classifications that are hierarchical in nature. And so we have one that's over 130 different sector classifications, so it is quite granular. That's what we think that we've done exceptionally well here at Luca when building out that taxonomy. But you're precisely right. Like it'll do the same thing that it does in traditional finance. Like you can do sector ETFs off of it or sector portfolios off of it, pre-trade compliance. You can do portfolio stratification and risk limits. So pretty much everything that like sectors were used for before crypto. These taxonomies will be used for the very same thing, but for digital asset portfolios.
I'm curious to hear about what your perspective is, because I know that Luca does some work for the Canton network, and I talk about Canton every week here on the show, and talking about all the new institutions that they're plugging into their network, and how these guys are actually processing some real volumes of money on their network. What does Luca do for Canton? And I'm curious what your perspective of the network is.
Yeah, sure. So, obviously Canton is has solved for the issue of privacy when it comes to kind of the traditional financial markets. And they offer things that like a public blockchain, it would never fly, right? It wouldn't be fit for purpose to operate on some of the public blockchains, right? And so, they saw the need and around financial market infrastructure and what that means on chain, but then also preserving that privacy, right? That is so critical to financial operations, right? And so I'm a fan of the Canton network. Clearly, they've got a ton of traction, right? A ton of people participating in the ecosystem. The coin just went live. There's a Q4 in spot markets on some of the centralized exchanges. So really exciting to kind of see where they continue to take the network in the future. As for kind of your question around like what do we do for it, really kind of two things where we interact with the Canton network. One is the Canton coin pricing methodology, right? And so we actually just spoke about this as like, what does the actual price look like for the Canton coin, right? And like I said, you can't just pull a price off of an exchange and call it a day, right? Institutions need a defensible methodology that identifies a principal market, right? And that applies fair market value in accordance with ASC 820. And so what they need is when they sit down for the audit, they're holding on their Canton coin, they need to actually be able to stand behind how they priced and valued the Canton coin on their balance sheet. So we've extended the Luca Prime algorithms even before there was a spot market. When there was a perpetual market before the spot market was listed, we were able to price real-time Canton coin prices back into the network for use in the fair market value for participants in the ecosystem. So that's one, pricing. And the second is Luca is also a super validator on the Canton network. So not only are we helping with some of the data attributes, but we're also part of the infrastructure for the Canton network as well.
That's fascinating. Well, look, Dan, I know that you're a busy man. There's a lot happening at Luca, so I'll end it there. Where can the folks find out more about what you guys do over there at Luca?
Yeah, you can go to luca.tech. Click on the button, contact us, and we're more than happy to set up calls with our product team and kind of walk you through what we do. Quite a lot of interesting stuff going on in Luca, and sometimes it doesn't always get the airtime that I think it deserves. So we're happy to talk to the ecosystem anytime.
No, you guys are the real deal. Well, look, I appreciate you joining us today, Dan.
Great, thanks, Lewis. Appreciate it. Thanks for having me.
All right, that was Dan from Luca. Those guys, like I said, they are the real deal. They are doing some incredible work for this space, getting some really good data out there, and it's fascinating as well. Again, because I'm not an institution. I don't work for an institution. I'm not a tax guy. I would just assume that if you own Bitcoin or some altcoin on your balance sheet and you need to report your tax, you just go to Coinbase, you just quote the price there. But there's this whole rigmarole that you need to go on behind to try to calculate fair value, because you've got all these different exchanges. Then not to mention the CAF rules that are coming into play. And so it's all stuff that we just take for granted. We take for granted this data that we get and what companies do behind the scenes. And so that's why it's so fascinating talking to people like that work and operate at Luca, because you get a new perspective on the crypto space that we don't really hear talked about all that often. So if you want to check out the guys at Luca, go to luca.tech. Yeah, they're as I say, they're the real deal. I see a few comments talking about Canton. Canton is going up. It's only up 2%, my guy. It's only up 2% today. I'm gonna buy some Circle in a couple more weeks. I mean, when it comes to Circle, this is what I'm looking at here. You draw the anchored VO up off the all-time highs, and even though I'm talking about the whole Clarity Act, it's no coincidence that Circle found some resistance right at the anchored VWAP from its all-time highs. It's as clean as that. And so I think a little bit more coiling here, a little bit more messy action. I want to see it get back above this anchored VWAP off its all-time highs. Thanks, Jay. Appreciate it. Appreciate the compliment about the interview. What's on everybody's mind? Been live now for more than an hour. So, you know, I normally go for 30 minutes, 45 minutes, but this week I've just been going. There's a lot to talk about. There is a lot to talk about, I gotta say. I think there was this clip on the morning show with Stephen Weissel. He was talking about the S&P, but he was talking about valuations in some of these growth companies. I just want to pull that up because I think this is particularly relevant to crypto as well. So I'm going to share this tab, and I'm just going to hand the floor to what Weitzel was saying on the morning show. I believe it was earlier today.
It works. 650. 650.
Yeah.
Big level. What do you think? Do you get more cautious below there?
Look, so you know, I've been cautious on S&Ps for a long time because of the growth concentration in that index. And so, you know, I think that the S&P is really just getting what it deserves over the last 6 months, 8 months or so. You've got this just, you know, kind of long consolidation that's happening there because a lot of these tech names whose valuations I think had gotten out in front of themselves, great companies as they may be, but we're starting to see that, I think, come home to roost. And so we certainly need to be mindful about playing defense always. The opportunities have been elsewhere. And so
I think that's fascinating because I come on here every week and I say, I mean, it's similar where I talk about some of the valuations of these cryptocurrencies, and I talk about something like Cardano. Cardano was a classic example. Let me stop sharing. Cardano was a classic example, right? I was saying these guys generate literally $300 of revenue every single day. And that saying that Steven said there, that the rooster is coming home to roost. What was he saying? What did he say? The coming home to roost. I'm not a Midwestern guy, you can tell. I could try to do a Stephen Weissel accent, but I'm not going to try that. But we're starting to see that come home to roost, like Stephen said, and I think we're starting to see that same phenomenon play out in the crypto space, where, again, I just want to share this tab of coin market cap. Right, you've got Cardano valued at $9 billion on a fully diluted basis. By the way, it's $12 billion. Got Bitcoin Cash at $9 billion as well. Like, nobody uses these things. And again, just to beat Canton again, just to talk about Canton again, $5 billion. And this thing generates probably more revenue than all of these cryptocurrencies above it. And so I think what we're seeing right now is we're seeing a lot of these crypto assets beginning to trend and bleed lower to zero. And we're starting to see that come home to roost. I'm going to say that. That's my new catchphrase now. And we're starting to see the likes of Cardano. These things are just going to bleed lower. You look at this a nasty downtrend in Cardano. Bitcoin Cash, surprisingly, has a little bit of relative strength. Maybe not anymore. But I think a lot of these charts, they just don't have a place in the largest, most established cryptocurrencies in this space. And so I think when you're looking at the S&P 500, you're looking at all of these technology companies, and you're starting to see the money that started to rotate out of technology last year and into international, into some of more of these value areas. I think that same phenomenon is going to happen right now, where I think the market cap in crypto is going to rotate to where there is value. And there isn't much value in this space at all, because you have all of these cryptocurrencies with all of these really high market caps and all these VCs that back them to really high, fully diluted valuations, and they're all just diluting and they're all just crap. But now we're starting to see that finally settle. I talked about the .com, the early 2000s .com bubble, right? Where you could just spin up a website. You could say something disruption. You could go to a venture capitalist, and then you could just walk out with some money. The same thing is kind of happening with AI at the moment, where most of the expenditure on artificial intelligence is largely going to be wasted, because it's just going to settle to a handful of winners. You saw that with ChatGPT and OpenAI. This week, they pulled the plug on Sora, which is their video generation platform. They pulled the plug on that. Meta wasted something like $80 billion on the metaverse, not really relating to artificial intelligence, but it's just the broader point that most of this expenditure and most of this investment is largely going to be wasted. We're starting to see that with crypto, right? We're seeing all of these venture capitalists that put money into these coins that just promised that they were going to change the world, but never really did. Money is starting to get tighter and tighter in the crypto space, and I think it makes sense for us as traders and investors to be more selective than ever. Rather than going out and buying a basket of 20 different cryptocurrencies because you think you're diversified, I would far prefer to own just 2 or 3 or 4 that I've got a lot of conviction in behind, because being selective in this market, I think, is so important, and I think it's going to continue to reward investors going forward. So doing the work, doing the homework, being selective, I think absolutely makes sense in the crypto space. CC is up 4%. I mean, just seems like a normal day to me. Seems like a normal day to me. So we talked a lot today. We talked about Canton, we talked about Hyperliquid, we talked about what's happening in the oil market and what's happening in the broader market. We had Dan on as well, and the Clarity Act, talking about the Clarity Act as well. I think you need to be paying attention to what's happening in Washington, and you're going to start to see that being reflected in price as well. You're seeing that with Circle was down 20% in a single day based off what was happening with the Clarity Act. So we've covered a lot today. How about we end on a lighter note? I saw this tweet. I found this hilarious, by the way. I saw this tweet of this kid on Instagram Reels, and he was just talking about his day trading strategy. Just look at this. Look at this,
guys, it's day 14 of day trading. Let's get it. So I learned a new strategy. It's called Bollinger Bands with RSI. So let me explain, right? So I think we actually might have a setup. When it goes below, let's see. So the line, that very bottom line is at like the 24. I don't know what the 24 number means.
I don't know what the 24 number means.
I don't know what it means. It just means market is going to shift up, I think. Also, it had one of the wicks has to close below the lower Bollinger Band, I think.
See, this is what I love. This is what I love about this new generation that's coming up. And I think crypto has really helped with this. That, sure, there's a lot of degeneracy and gambling out there. But then you have kids like this. I don't know how old he is. He looks quite young. He's out here day trading. He's taken his finance into his own hands, and they're all going to blow up. They're all going to lose their money. But that doesn't matter, because what do they have? They have a little bit of pocket change. They trade, and maybe they blow up an account with a few $1,000s. It doesn't really matter. But what matters is that they're taking their own financial well-being. They're taking their financial journeys into their own life. They're not just going to go and just sit in an index fund and be happy with 7%. You have these kids that are going out here. They're starting these AI companies and these trying to develop software. They're trying to trade perpetual futures on Hyperliquid. Now, again, most of them are going to lose their money. That's all right. This guy,
Day 14 of
he's going to lose his money. But still, how cool is that? That you have all these kids. They're playing with the toys. I kind of respect that. I respect that. All right, I've been going for a bit too long. I'm going to leave it there. If you want my research delivered to your inbox every single day, do so at allstarcharts.com/newsletter, allstarcharts crypto daily. You can get my insights sent to your email every single week, so you don't need to be here. You can just get my emails and just enjoy your Thursday evening. But look, I'll leave it there. I hope everybody has a great end to the rest of the week. And I'll catch you at the same spot next week.